Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share. An inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. We'll do the same without wasting a single second of your time. Bada bing, bada boom, we go. So, essentially, Sideways Saturday, we did not do a single thing, and we are closing above the range here into the possible retrace to the upside. Does it continue? Does it fail? That's what we're here to find out as we go into high block to take a look at the liquidity. What is high block? Well, people lock their liquidity into the charts by not using a stop loss, and we get to see where those crispy characters lie in wait to get burnt to crisp by the market maker. So let's do that now. On the 1 minute time frame. 1 minute. 1 minute time frame. Same as yesterday, nothing was really pinged in. Over the weekend, you still have that 84 million down at 26,284. I expect a little bit of like what I call pinging, where they ping both sides by seeing what limit orders are in, like ping, and then they can gauge where things happen. And then if it pings in some pools imbalance to the upside, they might go back up. If it pings more downside, then they'll just activate from that point. But as of this moment in time, you're imbalanced to the tune of 7.69 billion to the downside, and you have those pools we outlined for you the other day, 25,488 and 25,194, $200 million pools each down below there, and you do have a imbalance on the 1 minute time frame. Let's go ahead and expand our vision to the higher time frame of the 7 day and beyond. Oh yeah, we have to change to max liquidity every time for some reason. Thanks for changing that, high block. So you have about 10 billion up at the 27.1 region, and you got much more down below, about 15 billion, I would say, 15 billion plus. The main cluster being at 25,650. So we marked that off already, and let's go ahead and switch to the monthly time frame. Monthly time frame does have a draw to the upside. We went over that yesterday, so they do have some double-digit pools up to the 28.6, 50, 60 billion. So if they do want to draw up there to continue, they could. There is not much on the monthly time frame below except sub 24k. So are we having a draw to continue the squeeze to the shorts before retracing? You do have that 50 billion up at the 28.4 region on the 3 month. The obvious draw imbalance being to the downside still on the 3 and 6 month. So the 6 month having that 170 billion down at 24.3. If you go to the highest time frame at 2 years, then you will see that is $253 billion at 23.6. And yeah, stuck between a rock and a hard place as always. And we got that draw that could suck up to the high here of that and clear that out. Let's go to the Binance chart and see what is crack-a-lacking for the weekly candle close coming up soon to a theater near you. So the overall just sentiment, you have impulse retrace to the downside, and if you maintain that, if you do not close candles above the 27k region with some conviction, then this could just continue down into the 23.6, the external liquidity pool imbalance that we talked about on the 3 and the 6 month. This is where you're headed if that you cannot close candles above 27k. Now you do have a pool from that we marked off a long time ago that we never retraced into at the 27k region, so it is possible to draw up to that region and reject at the 786, which is also that 236 on the bearish. And then you have the bullish narrative, this impulse retrace here that we maintained the 236, and we've been just drifting higher. So until you reach some resistance levels and drop, this could continue essentially up to these regions, and we have some pools up above at 28k that coincides with the liquidity on the monthly we just went over. And you can pause this and mark off the levels as you see fit, or know how we did it by using this impulse retrace idea. So within that impulse retrace is some math contained within the algorithm telling a story of where it wants to go. So conversely here, this impulse and retrace here contains a story of where it wants to go as well. So that's why it bounced off the 706 here and not down randomly in the middle here. It's at these levels where reactions occur. All right, so let's go into the momentum. Heads up display is on. What is this little bit of happiness with the rocket ship that took off on Monday? It is Momentum Master. You can scroll down to features, toggle at your leisure, or read about each feature, like the stochastic array, which took off on Saturday down at these rocket ships. And we had that TA for you as well. So if you're new, it's pretty cool. Check it out. All right, so daily time frame. So we're at the daily cloud resistance, still mighty thick on the daily. There is some interesting curvature here, suggesting that if you do pierce up above it and hold, then this fractal-like nature of, meandering around could continue. So there is something to look at in terms of reactions at the cloud on the daily if daily candles start to show some conviction and break this bearish super trend, which has been holding on the daily. See this purple line? Held on August 29th and rejected the following day, and we've been seeing that rejection, which would also coincide with the math. So if you don't know the math, the ATR and the super trend will give you that as well. If you look at the lines here of the baselines, they're holding the price quite nicely thus far. Let's go ahead and turn on the Momentum Master B. You are getting overbought on the stochastic on the daily time frame. The Williams is still pointing up here, so that could suppress you. We did talk about, by suppress I mean it could suppress the KD lines and keep them pinned higher, and they don't have to reset immediately. Why is that? Well, looking at the 3-day, you're just starting to get this cross-up event, so that subtle support could be inbound if we do continue higher in this impulse to retrace into the vector candles here. And it still could just be a bearish retest before continuing lower to these pools. So it's just looking at these as they occur. 22-hour also having the average of the Williams come up to itself. We were talking about that idea as well, like the instances where it rejects with this gap between the Williams and the average is few and far between. It does happen, and we did say that that happened on August 31st, but generally speaking, it comes up to it and gives you a little bit of suppression juice, especially if it is continued in the continuation idea. 12-hour doing the same thing, getting pinned as this drifts up to it, getting to that Williams cross down event position. 6-hour already there, and this is insinuating what was going to happen in advance as you go into the lower time frames. The money flow coming beneath the RSI here on the 6-hour, suggesting you could get a wind up pitch to the upside. If you go to the, let's actually look at the cloud here, the 6-hour cloud down below. We never came back to kiss it really. I mean, we did pierce above it here and do that pierce, kiss, continue. So that kiss of the cloud was at the thinning point here, so that was also a continuation idea. Do we come back to that 236 level to clear some of the liquidity on the 100xers and the 50xers? We could. It would make sense. And why were we saying that that could occur yesterday, and why are we still having this here to show you? Well, you have a cross down event on the baselines on the 4-hour here. Now, doesn't mean it immediately double tops and crosses down, especially if it seems like an obvious short. They could do this third push up and then come down. So you have 3 hits to that region. We have 1, 2, and so we could get a third hit, and you watch for these reactions off these zones. Power of threes, it's a concept, you can look into it. 3 hits to the high and then reverse. So let's go ahead and see. 4-hour time frame did not get that suppression, been hanging out at this 20 region as the Williams kind of meanders and lets the other higher time frames drift. Now if we go to the hourly is at the 50 level, indecision point, an ambiguity point of making a decision. You're holding on that cloud. We were talking yesterday back here, when you get to that cloud, if you break through the cloud and bearishly retest, the momentum is to the downside. We've been holding the cloud thus far, but the offer to break it is still on the table, so this point of contention, if you will, is still valid. So if we break the cloud, it's all if-then statement. So if we break this cloud, which is now showing some bullishness as the volume steps up, we had a vector candle hold us above the cloud here. So this idea becoming not invalid per se, but becoming interesting to note on the hourly time frame, that we could be getting some sort of reclamation of the cloud, if you will, and you get this kind of continuation up for that third hit. So if you were in from up here, you could basically reconsider or set to break even and look for a re-entry idea if you're keen to short, and looking at those 3 hits to the high. There could be another hit inbound as we reclaim this cloud and it starts to show some signs of life on the hourly time frame. All right, so as we're going into the week, it is low liquidity weekend, so what is it going to do? It's all about that reaction at this level as we hold this weighted moving average on the 15, which is that cloud on the hourly. So once again, this is not a level of entry. This is just observations of if-thens for where it could present you with opportunities. Not my cup of tea for an entry point, just giving you the levels as they present themselves to us. So we were looking at this idea of breaking the cloud because of the 6 time frames overbought here. This is the second hit to the high once again, so a third hit would make sense. How far up do we go? That 15-minute time frame coming down here with the hourly. So going into the daily candle close, that suppression of the daily time frame, trying to induce some shorts, the impatient shorts. But if you're a patient shorter, maybe it presents you with another higher up rejection point in here. So the 26837 region is where we've had some clean rejection points here, and are we going to get another one at this point? So look for another hit to sweep the highs and reject at the highs, and maybe you can find a low risk reward ratio idea. 26,930, holding that 706 and breaking above the 706. I call the 706 the trap door because a lot of times they'll reject at that trap door, and that was evident down here. The converse form of that, the 706 down at 24,972, rocket ships appeared and boom, we rejected off of that. So you can use that information accordingly. 26,930 and the 26,837, third hit to that zone. Are we going to get that before the weekly candle closes in? And that's your surgical kind of update for today. Once again, you're at that low liquidity point of the weekend, so they're going to do that pinging of both sides to see what's crack-a-lacking and then possibly shift in the direction of what we were talking about yesterday, down to the 618 region. So something like that, and then come down to here. Just that's my story, and I'm sticking to it for now, as this cloud starts to give a little bit of insinuation of life on the hourly. All right, guys, I gotta get going. I can look at one other thing. Do you have anything that we want to look at? Anyone? Anything? Look at the Bitcoin dominance in the USDT. Dominance dropping to an oversold point where it can surge up, meaning that Bitcoin could have a move. The USDT dominance went down to oversold, which means they could possibly knock out some people. This is the opposite effect. Here's when people put money, were knocked out of trades, and then they reinvested off of the 786 and the nuke. So this is inverse to Bitcoin. When Bitcoin had the rocket ship, they had the nuke, because people were knocked out of their trades, and that's what makes the USDT dominance go up. And then they reinvested to cause Bitcoin to surge, so that the USDT dominance dropped. And so now you're getting oversold, which means they possibly want to knock some people into USDT. As Bitcoin dominance is also oversold, that means the dominance Bitcoin will steal the show by knocking people into USDT. Allah, possibly retrace down to that 618 region that we were just talking about at the 20, that the liquidity pools down to 25,659 down here. 25.7, 25.6 region. Perhaps. No guarantees in life, no guarantees in trading, but that's the story, and I'm sticking to it as you reach into the resistance of total getting overbought here at the 706 trapdoor. Oh, on the bearish trend-based fib, that could knock you down to these 9.959 billion down here. We've been holding this region pretty well though, so it could just take you down to the 786. Who knows? Anything to look at? Let's see. No? Good? All good? Cool. And that's why I have this cool algorithm, because it just basically can give you a deep insight quickly and not waste a second of your time. So that's your daily update, and it generally comes to fruition with only giving like 20 minutes of analysis or whatever. So no guff, no fluff, no chicken rough. I don't know what to rhyme with that. So thank you for coming on into the live and sharing your essence with me in this eternal moment, of which we all share an inextricable and inexorable part. Thank you for doing your part for coming on in. We'll do the same, bringing the fire there. Actually, the